What if the biggest AI opportunities aren't the obvious ones? Today we're uncovering 3 overlooked companies with massive AI potential that the market is missing. The AI boom is creating trillion-dollar markets, but while everyone chases the same high-flying names, we're looking where others aren't. We'll break down a legacy tech giant transforming into an AI leader, a cybersecurity pioneer using AI to defend the digital world, and a disruptor rewriting the rules of lending. These picks have strong fundamentals, cutting-edge technology, and stock prices that don't reflect their true potential. We'll show you why these stocks are so compelling, what could drive their growth, and why now might be the perfect time to get in before the crowd. Get ready, these hidden gems could define the next wave of AI winners. Hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. First up, IBM. Yes, that IBM. The company that's been a pillar of the tech world for over a century, quietly shaping the backbone of global business. While many still associate IBM with mainframes and legacy systems, the reality is far more exciting. Forget the old tech label, IBM is quietly becoming an AI powerhouse. Behind the scenes, they're transforming their business, investing billions into artificial intelligence, cloud computing, and next-generation technologies. Their offices now buzz with innovation, as teams work on solutions that will define the future of enterprise technology. Their acquisition of Red Hat was a game-changer, giving IBM the foundation to build a flexible, enterprise-grade AI platform. This move wasn't just about expanding their cloud capabilities, it was about creating a seamless bridge between traditional IT infrastructure and the new world of AI-driven business. IBM's watsonx platform lets businesses train, validate, and deploy AI models across cloud and on-premise systems, a huge advantage for companies with complex data needs. watsonx isn't just a tool, it's a comprehensive ecosystem that empowers organizations to harness their data, automate processes, and unlock new insights, all while maintaining strict security and compliance standards. While most AI hype is consumer-focused, IBM dominates the enterprise sector, where the real sticky money is. They're not chasing headlines with flashy chatbots or viral apps. Instead, they're embedding AI into the core operations of the world's largest companies, solving real business problems at scale. Fortune 500 companies are turning to IBM for practical, scalable AI solutions that integrate with decades of existing data. These organizations trust IBM to modernize their infrastructure, streamline operations, and drive digital transformation because IBM understands the complexity and scale of enterprise needs like few others can. The market still sees IBM as slow-moving, but that's outdated. Their AI and hybrid cloud revenue is growing fast and their consulting business is booming. In fact, IBM's consulting arm is now a critical driver of growth, helping clients implement AI strategies and navigate the rapidly changing tech landscape. Despite this, IBM trades at a low valuation, more like a value stock than a tech innovator. The market's perception hasn't caught up with the company's transformation, creating a rare disconnect between price and potential. Add in a strong dividend, and you're getting paid to wait for the market to catch up. IBM's consistent dividend payments make it a favorite among income investors, providing stability even as the company reinvents itself for the AI era. IBM's deep enterprise relationships and high switching costs create a powerful economic moat and recurring revenue. Their clients are often locked in for years, relying on IBM's expertise and infrastructure to keep their businesses running smoothly. They're investing heavily in next-gen AI and even quantum computing, showing a clear vision for the future. IBM's research labs are pushing the boundaries of what's possible, from advanced natural language processing to breakthroughs in quantum algorithms that could one day revolutionize industries. The leadership team, led by CEO Arvind Krishna, is executing a focused transformation. Krishna's background in cloud and AI has been instrumental in steering IBM toward high-growth opportunities, and his strategic vision is reshaping the company from the inside out. IBM's commitment to AI governance and ethics is a key selling point for large enterprises navigating new regulations. As governments and industries grapple with the challenges of responsible AI, IBM is setting the standard for transparency, fairness, and accountability in AI deployment. The market's skepticism is our opportunity. IBM is a revitalized leader hiding in plain sight. While others chase the next hot startup, savvy investors recognize the value in a company with deep roots, proven resilience, and a clear path to future growth. As their AI and cloud businesses grow, Wall Street will have to re-rate the stock. Analysts are already starting to take notice, with upgrades and bullish outlooks reflecting IBM's accelerating momentum. This is a value, growth and income play all in one. Few companies offer this unique combination: steady dividends, robust fundamentals, and exposure to some of the most transformative technologies of our time. With a market cap of just over $233 billion, earnings per share at $6.29 and a price-to-earnings ratio hovering around 39.9, IBM may not scream growth stock, but there's renewed interest bubbling under the surface. The company reported $62.75 billion in revenue for 2024 and net income of $6.02 billion. What's caught analysts' attention recently is a combination of technical and sentiment-driven indicators. The stock has formed what's known as a hammer chart pattern, which typically signals a potential reversal in a downward trend, suggesting IBM might have found a floor. On top of that, it was just upgraded to a Zacks rank #2, meaning it's now rated a buy by one of the more followed firms on the street. That kind of upgrade tends to attract attention from retail and institutional investors alike. Despite recent setbacks, especially in its software division, there's growing confidence in the company's long-term potential. Analysts believe IBM's software segment still has room for a rebound, and with sentiment improving, this could be a case where the fundamentals slowly start catching up with the technicals. In short, cautious optimism is building, but execution is going to be everything from here. For patient investors, IBM offers a rare chance to buy into the AI revolution at a discount. It's an opportunity to participate in the next wave of technological change, backed by a company with the scale and expertise to deliver real results. Don't let the old reputation fool you. IBM is a foundational player in enterprise AI. Their technology is powering mission-critical systems in finance, healthcare, logistics, and beyond, making them indispensable to the world's biggest organizations. The combination of low valuation, strong fundamentals, and a growing AI business is too compelling to ignore. IBM's balance sheet is solid, their cash flow is strong, and their investments in innovation are starting to pay off. IBM is our first undervalued AI stock ready to skyrocket. As the world wakes up to their transformation, those who get in early could be rewarded handsomely. The next chapter of IBM's story is just beginning, and it's all about AI. Next up, let's talk about Okta, ticker symbol OKTA, the digital gatekeeper of the internet and a true pioneer in the world of AI-powered cybersecurity. In today's hyper-connected world where every login is a potential target and every digital doorway needs a vigilant guard, Okta stands at the forefront, protecting the identities and data of millions of users across the globe. Okta's identity and access management platform is the invisible shield behind thousands of companies, securing logins and sensitive information for organizations of every size. By leveraging advanced AI, Okta can detect and neutralize threats in real time, ensuring that only the right people have access to the right resources, no matter where they are in the world. Their AI models are constantly learning, analyzing trillions of data points from login attempts, user behaviors, and network activity. This allows Okta to flag suspicious activity, like impossible travel logins, credential stuffing, or unusual access patterns, before a breach can even occur. The result? Proactive, intelligent defense that adapts as fast as the threats evolve. In a world where hackers are increasingly using AI to automate attacks and exploit vulnerabilities, Okta's adaptive, predictive security is not just an advantage, it's a necessity. Their technology acts as a digital immune system, constantly scanning for anomalies and responding in milliseconds to keep organizations safe. Of course, no company is immune to setbacks. The market punished Okta after a high-profile security breach and a period of slower growth, sending the stock tumbling. But if you look closer, the reaction was overblown. Okta's core business remains strong and the company has taken decisive action to address its vulnerabilities. In response, Okta doubled down on security, investing in new technologies and processes to harden its defenses. At the same time, leadership made a strategic pivot, shifting focus from breakneck growth to sustainable profitability, a smart and necessary move for a maturing SaaS company operating in a competitive landscape. Today, Okta's stock trades at a significant discount to its intrinsic value, despite the company's leadership in a mission-critical, fast-growing market. For savvy investors, this disconnect between perception and reality creates a rare opportunity to buy a best-in-class business at a bargain price. Okta's platform is deeply embedded in the digital infrastructure of enterprises worldwide. Once a company integrates Okta, it becomes the backbone of their identity and access management, making it extremely difficult and costly to replace. This stickiness translates to high customer retention and recurring revenue. The acquisition of Auth0 was a game-changer, expanding Okta's reach into customer identity and access management. Now Okta is the only company that can offer a truly end-to-end identity security solution, serving both workforce and customer use cases across every industry. But Okta's innovation doesn't stop at threat detection. The company is pioneering passwordless authentication, using AI to enable seamless, secure logins with biometrics and adaptive risk analysis. This not only improves security but also delivers a frictionless user experience, something that's increasingly important in a digital-first world. As digital transformation accelerates, every organization, large or small, needs what Okta offers. The shift to remote work, cloud adoption, and the explosion of SaaS apps have made identity security more critical than ever. Okta is perfectly positioned to benefit from these unstoppable trends. While the market remains fixated on short-term challenges, long-term investors see the bigger picture. Okta's current valuation reflects temporary headwinds, not the company's enduring strengths or its massive future potential. For those willing to look beyond the headlines, this is a compelling entry point. In today's threat landscape, Okta's AI-driven security is a must-have, not a luxury. As cyber attacks grow more sophisticated and frequent, organizations can't afford to cut corners on identity protection. Okta's solutions are mission-critical, and demand will only increase as digital risks escalate. Okta's vast ecosystem of integrations and network effects make onboarding new apps and users effortless. This ease of use drives further adoption, creating a virtuous cycle that strengthens Okta's competitive moat and accelerates growth. The company isn't standing still. Okta is actively innovating with AI, expanding its product suite, and targeting massive new markets like identity governance and privileged access management. These initiatives open up billions in additional revenue opportunities. The fundamentals are robust, the competitive moat is wide, and the upside for patient investors is significant. Okta's recurring revenue model, high gross margins, and expanding addressable market make it a standout in the software sector. As Okta continues to execute on its vision and deliver results, investor confidence will return, and so will the stock price. Leadership is focused, the strategy is sound, and the company is well-positioned for the next phase of growth. Don't let short-term fear cloud your judgment. Okta is a best-in-class software company with a bright, AI-powered future, and its role in securing the digital world will only grow more important. Okta currently has a market cap of $16.91 billion, earnings per share of 66 cents, and a notably high P/E ratio of 147.11, a valuation that suggests high expectations but also risk. In terms of financials, they posted $2.61 billion in revenue last year, with a net income of just $28 million. So, on paper, it's not the cleanest balance sheet. But what's keeping analysts bullish is the company's recurring revenue model and its consistent performance in surprising on earnings. Okta has built a track record of beating estimates, and that alone has many investors hoping for another beat in the next report. Beyond the numbers, there's also growing chatter around Okta as an acquisition target. With its strong position in AI-enhanced identity security and relatively low debt, it's become a candidate for consolidation in the cybersecurity space. In fact, analysts recently upgraded the stock to a strong buy, pointing to its undervalued status relative to peers and the potential for M&A activity. So despite some volatility and lingering questions around guidance, Okta's position in a growing segment, its earnings history, and its potential strategic value are keeping investor interest alive, especially for those with a bit of risk appetite. At today's prices, Okta stands out as a high-conviction pick for the next wave of AI-driven security innovation. The company's blend of technology leadership, market opportunity, and resilient business model is hard to match. That's why Okta is our second undervalued stock with skyrocket potential, a rare opportunity to invest in the future of cybersecurity and digital trust. Finally, let's talk about Upstart, ticker UPST, a bold disruptor that's shaking up the world of lending by harnessing the power of artificial intelligence. In a financial industry that's been slow to evolve, Upstart stands out as a true innovator, determined to make borrowing smarter, fairer, and more accessible for everyone. Upstart's platform doesn't just tweak the old system, it replaces outdated FICO scores entirely with advanced AI models. These models analyze over 1,600 variables, from education and employment history to spending patterns and even the applicant's area of study. By looking at a much broader set of data, Upstart's AI delivers a far more nuanced and accurate picture of credit risk than traditional methods ever could. The impact is profound. More people are getting approved for loans, often at lower interest rates, while lenders see fewer defaults. It's a win-win scenario. Consumers get access to affordable credit, banks reduce their risk, and Upstart earns a reputation as a trusted partner in the financial ecosystem. After its IPO, Upstart's stock price skyrocketed, reflecting the market's excitement about its disruptive potential. But as interest rates began to climb and the broader economy cooled, loan demand dropped sharply. The stock tumbled, mirroring the volatility that often comes with high-growth, high-tech companies. Today the market seems to be pricing Upstart as if these tough times will last forever. But history shows that economic cycles are just that, cycles. The current pessimism overlooks the company's long-term potential and the resilience of its business model. When interest rates eventually stabilize and economic activity picks up, demand for loans will return. Upstart's AI-driven platform will be perfectly positioned to capture this renewed demand, offering banks and consumers a smarter, more efficient way to connect. Even in today's challenging environment, Upstart's models consistently outperform traditional credit scoring systems. Every loan processed feeds more data into their AI, making it smarter and more accurate with each transaction. This self-improving loop is a powerful competitive advantage. Upstart isn't stopping at personal loans. The company is rapidly expanding into auto lending, a market that's 7 times larger than personal loans, and has its sights set on the massive mortgage industry as well. Each new segment brings exponential growth potential and further strengthens Upstart's data advantage. Right now, Upstart's valuation reflects fear and uncertainty, not the company's true potential. Investors are focused on short-term headwinds, but the long-term opportunity is enormous for those willing to look beyond the current noise. Make no mistake, this is a high-risk, high-reward play. For investors who believe in the transformative power of AI, Upstart represents a rare chance to get in early on a company that could redefine an entire industry. Management hasn't been sitting still. They've aggressively cut costs, preserved cash, and focused on building a more resilient, adaptable business. These moves position Upstart to weather the storm and emerge even stronger when conditions improve. Upstart's long-term vision is ambitious, a world where access to credit is based on a person's true potential, not just an arbitrary score. Imagine a future where millions more people can pursue their dreams, buying homes, starting businesses, or going back to school because they're evaluated as individuals, not statistics. The technology behind Upstart is years ahead of most competitors. With every loan, their AI grows smarter, creating a powerful network effect. The more data they collect, the better their models become, and the wider the gap grows between Upstart and traditional lenders. The next big catalyst could be a shift in the macro environment, like falling interest rates, or continued progress in new lending segments. Either could unlock massive growth and send the stock soaring once again. Upstart serves the full credit spectrum, but it's especially valuable for the missing middle, those overlooked by FICO, but who are actually creditworthy. By unlocking credit for this group, Upstart is helping to close the financial inclusion gap. The pain of the recent downturn is already priced in, but the upside is immense if Upstart succeeds in redefining how credit is granted. For those with patience and conviction, the potential rewards could be life-changing. This is a venture-style bet in the public markets, volatile, unpredictable, and not for the faint of heart. But for those willing to take the risk, the payoff could be extraordinary. With a market cap of $7.83 billion and 2024 revenue of $628.83 million, Upstart is still in its growth stage. But it's also operating at a loss, with net income at negative $128.58 million. That said, there are some bullish signals. Analysts have initiated buy ratings ahead of its next earnings report, expecting strong growth in consumer loan originations and partnerships. The company's AI platform is being credited with improved underwriting efficiency, and projections show a potential 60% revenue growth in 2025, with a shot at crossing the $1 billion revenue milestone for the first time. Some are even calling for the stock to hit $100 per share by summer 2026, which would represent a major rebound from current levels. Upstart has already posted a 40% gain this quarter alone, easily outperforming most of its fintech peers, but it's not without risk. The company still carries $735 million in net debt, and there are real concerns about stock dilution and dependency on broader credit market conditions. So, while the growth potential is definitely there, it comes with a high degree of uncertainty. It's a classic high-risk, high-reward setup, and investors will need to stay closely tuned to macro conditions, especially interest rates and credit availability. For a small, speculative part of your portfolio, Upstart offers a unique blend of explosive growth potential and deep value. It's a rare opportunity to invest in the future of finance at a significant discount. The AI core at the heart of Upstart is only getting stronger. As it ingests more data and weathers tough economic conditions, its predictive power and competitive edge continue to grow. If you believe in AI's ability to disrupt legacy industries, Upstart is a bet worth considering. It's not just a stock, it's a front-row seat to the future of lending. That's why Upstart is our third undervalued AI stock with skyrocket potential, a company that could help shape the next era of financial innovation. There you have it, IBM, Okta, and Upstart, 3 undervalued AI stocks with massive upside. So across these 3 names, IBM, Okta, and Upstart, we're seeing different flavors of investor sentiment. IBM is showing early technical signs of a turnaround. Okta continues to draw a speculative upside from its earnings history and takeover potential. And Upstart is leaning heavily into its AI story as it works to prove it can scale profitably in a tough financial environment. For investors, the key is understanding not just the data, but the narrative behind the numbers, because that's where the real opportunity tends to hide. The real value in AI will come from companies solving fundamental problems, not just the obvious tech giants. If you want to learn how to spot undervalued companies and build long-term wealth, check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now, which of these 3 stocks do you find most compelling? Or is there another undervalued AI stock on your radar? Let me know in the comments. Like, subscribe, and share your thoughts below. I read every single one. Thanks for watching, and I'll see you in the next one.